What types of ETFs should you be investing in? Quick story here. When I first started investing, I started with only $10 per month. And you may be saying, well, $10 is not a lot of money, especially if you're investing that amount per month. And you're absolutely right. However, after just 6 months, I was able to move from investing $10 per month to investing $50 per week. Within 6 months after that, I was able to start investing $150 per week. And then by my second year off investing, I started investing around $250 per week. Now, ever since I started doing that, I was able to increase my investments per week over and over and over again. And over time, I'm beginning to see the benefits of investing. Now, the main question is, what ETFs should you be investing in to make money? Because you don't want to put all your eggs in one basket, so to speak, because if you invest in one single thing and it goes down or takes a long time to give you any returns, then you've essentially just tied up some of your money for a long period of time. Also, active investing takes a lot of time because you're going to have to go out there and you're going to have to pick stocks. You're going to have to review the company's balance sheets, the cash flow statements, the income statements, the 10Q forms. You're looking at a lot of paperwork here. And then even after you've completed all that, you have to go and look at the management of the company, the team that's working there, the culture of the company, the vision of the people that actually manage and run this company. And that is going to take you literally hours, if not days, if not weeks, and possibly even months for just one single company. So point here is, instead of investing in one single stock, this is why you want to get into ETFs instead. Also, a lot of people want to diversify and invest in a lot of companies, but they also want to do so at a very cheap cost and in a way where it doesn't cost them a lot. And in this video, I'm going to share with you guys my strategy of investing, and more importantly, some of the ETFs that I use to invest in that you can consider using for investing with your portfolio as well. Now, the main point or the main idea behind this ETF investing strategy is that while one stock can go down and go down by a lot, for example, Amazon being 35% down right now, ETFs have hundreds of stocks in them. And so it's really unlikely that every single stock or most of these stocks are going to be going down at the same time. So it's less risky to invest in ETFs, and you're going to see a lot less volatility when you invest in ETFs versus individual stocks. Now, if you guys are new to the channel, my name is Ian, and on this channel, I talk about ways to make money, ways to save money, ways to invest your money. I talk about bank accounts, credit cards, crypto, just about everything to do with personal finance. So if you like these videos and you like these types of topics, be sure to give this video a thumbs up. It's 100% free, it won't cost you anything, and I'll really appreciate it. Also, be sure to subscribe with the notifications on, and that way you never miss any of the future updates of when I post new videos on this channel. Also, if you guys ever want to talk to me one-on-one, you can message me on Instagram. The link is down below in the description. And with that said, let's jump into the ETFs that you should consider investing in if you want to make some money. And by the way, guys, before we get there, an ETF is simply put just a collection of stocks, which could be hundreds or thousands, and this is just a way of diversifying, where instead of investing into one single stock, you invest into hundreds. Now, there are different types of ETFs depending on what you want to invest in. So for example, one popular one is the S&P 500, which is the top 500 US companies. And if a company is not performing well enough and it's no longer in the top 500, it is removed from that ETF, and another company that is performing well will replace it. So the cool thing about this one is that you'll always be investing in the top 500 companies, and you don't actually have to go out there and pick stocks yourself. Now, the same goes for just about any other industry that you want to invest in. So for example, if you wanted to invest in real estate, you could invest in a real estate ETF that would have hundreds of stocks from hundreds of companies that own real estate investments. So it really depends on what you want to invest in, but there's always going to be an ETF that you can invest in that gives you good diversification and allows you to invest in whatever industry you're interested in. Now, before I talk about the actual ETFs, let's first talk about where you can find these ETFs. So you can find them at just about any stock brokerage. However, all stock brokerages do pretty much the same thing in terms of just being that third party or middleman in between you and your investments. However, what you should be looking for from a brokerage is zero to no fees or very low fees. You also look for the simplicity to use their platform, whether it's a website or mobile app. You should also be looking at their customer service or their support, and then you should always be looking at any additional perks or features that they offer. Now, I'll save you guys a lot of time instead of going out there and looking at all these different brokerages. The one that I use and the one that I found to be really good is M1 Finance, and I'll leave a link down below to to it. It's an app. You can download it on your smartphone, and if you use my link, you'll also get $50 for free when you sign up and deposit at least $100 for your first deposit. But this app is completely free. It doesn't cost you anything to use it. You can start investing with as little as $10, and there are a lot of features in there that you can use to automate your investments, and it's also a very simple to use app and platform. Now, I've used other investment apps. For example, I've used SoFi Invest, I've used Webull, I've used Robinhood, I've used Acorns, and of all these other investment apps that I've used, I've liked M1 the most, and so this is why I chose to use M1 Finance. Now, as for the ETFs that I invest in that you can look at copying or including in your investment portfolio, the first one is the Vanguard S&P 500 ETF, ticker symbol VOO, and this actually accounts for around 50% of my investment portfolio. Now, this ETF includes it includes the top 500 stocks in the US stock market. So this would be like your Amazon, your Walmart, your Tesla, all these other super successful companies will be included in the top 500. Now, on average, this ETF has been giving me around 9% per year. I think the usual average is around 8%, so that's what you can expect from this ETF. Now, the second ETF is the Vanguard Total International Stock ETF, and the reason why I'm investing in this one is because while the US stock market is the best right now, there are other markets around the world that from time to time do exceptionally well, and so you want to be investing in US stocks, but you also want to be investing in stocks from other countries in other markets, and this ETF right here gives you a slice of the entire international stock market. Now, this is only 10% off my portfolio, but I think it's good to have a slice of the international market as well. And now the next ETF is the Vanguard Small Cap ETF. Now, this ETF consists of small cap companies, and this just simply means they're smaller companies, not your big corporations like Google, for example, but just really smaller companies. And the good thing about these small companies is that they have a huge potential to grow by a lot very quickly. But also on the flip side, they also carry more risk because they're small. So you could go out there and you could look for the next best thing or the next best company and try to invest in their stock and hope that they become super successful, or you could invest in a small cap ETF. And this way you're investing into the smaller companies that will make you a lot more money if they start growing very quickly. This ETF also takes up around 10% of my total investment portfolio. Now, the next ETF that I have is the Vanguard Real Estate ETF, and this is an ETF that helps you to invest in real estate. Now, investing into stocks and these companies are good, but I think you should also be investing in real estate because, for example, there are times when the stock market isn't doing so well, and then real estate may be doing a lot better. So it's just a way of diversifying your portfolio, and this is also around 10% of my total investment portfolio. Now, another thing to point out here is that these ETFs pay dividends. So apart from the ETF themselves increasing in value, you also get paid dividends, and over time, that dividend or the amount that you get paid can be a considerable amount of money. And if that dividend is reinvested, it compounds, and that helps you to grow your money a lot faster. Now, for the rest of my investment portfolio, it consists of individual stocks, but this video is about ETFs that you should be investing in, and I think these ETFs are some of the best that you should definitely have in your portfolio. So one, we have the Vanguard S&P 500 ETF, then we have the Vanguard Small Cap ETF, we have the Vanguard Total International Stock Market ETF, and the Vanguard Real Estate ETF. And with these ETFs, you'll be investing into the top 500 US companies, the overall international stock market, the real estate market, and those smaller companies that have a really great chance of growing by a lot really quickly. You'll also realize that all these ETFs are from Vanguard, and the reason for choosing Vanguard ETFs is because they have a really low expense ratio. So for example, there's some ETFs out there, similar ETFs from other companies, but they have an expense ratio of, let's say, 0.5% or higher. And looking at Vanguard's ETFs, the usual expense ratio is around 0.05% or thereabouts, so it's a lot cheaper to use Vanguard's ETFs. Now, if you want to invest in any of these ETFs, you can click on the link down below to M1 Finance. You can sign up, deposit $100, you also get $50 for free, and then you can start investing in these ETFs. And a good investment strategy is to dollar cost average, which means that you invest the same amount of money every single week, regardless of if the market is high or low. And what this does is it gives you the average price paid for all these ETFs. So for example, let's say you want to purchase the Vanguard S&P 500 ETF this week, and the cost is $400. Next week, the price may be $100, and then the next week, the price may be $200, and then the next week, it may be back at $400 again. But if you invest the same amount of money every single week for those 4 weeks, you would end up with an average price paid of around $275. So over time, dollar cost averaging works out to be a really good strategy because you're always going to have the average or get the average price rather than trying to time the stock market and trying to invest all your money at the right time. Now, with that said, let me know what ETFs you guys currently investing, if any of these ETFs are included in your portfolio, and if you'll be using any of these now. And with that said, drop your comments down below. Remember, if you guys ever want to talk to me one-on-one, you can message me on Instagram. The link is down below as well. Don't forget to subscribe and give the video a thumbs up if you like the content, and I'll see you guys very soon in the next one.